So the last time we spoke, I ended up telling you guys New Zealand US dollar was running in profit. So in this video, we're going to be looking back at that New Zealand dollar US dollar, seeing what happened about that trade, and then heading further into other trades I have taken. So join me in this trade review, and do well to hit the subscribe button if you're new here, because hey, we're talking about real trading here and you want to learn something, so it's free. Let's head into it. Now, the New Zealand dollar US dollar trade, which was running at the end of the last video, this trade lasted 245 hours and 24 minutes. Very long time trade. And you can see this was the entry. Price made its way, breaking a upwards trend line. And there's something new, right? There's something new, but I'll teach you guys during the video. So just stick along, you'll see it. When price broke below this trend line, we took a sell, and that sell led all the way down here, but we followed price until it broke our downwards line. We had a new downward line following it. You can see the new downwards line right here. As soon as price broke through the line, I gave it an extra one more candle before I closed out. Now the next trade after this was the Australian dollar US dollar, and there are not much trades. I think there are 1, 2, 3, 4, 5, 6, 7, 8, 8 trades. Australian dollar US dollar, this was November 10th all the way till November 13th, and this trade lasted 86 hours 30 minutes. I had a profit of $1.71. I also added writing my risk amount recently, so I risked $10.47. It means, what this means is my account balance at the point in time of taking this trade was $1,047. Again, I risk 1% of the account balance in each trade. This trade had 2.5 touch points on the action line and 2 touch points on the safety line. Let's take a good look at it. Now this is what I was talking about. It had 2.5. Why did I say 2.5? This, as you see here, is my initial touch, or rather initial action line, and this is my secondary action line, and I'm going to explain this quickly. To explain this, I'm going to go into trading view, and I'm just simply going to run a quick explanatory situation. Let's take a downtrend, for example. This is a downtrend, right? And then as a trend line trader, you'd observe this trend like this, right? You observe this trend like this, and let's say you use a steeper line like this. Good, this is steeper line. When price breaks above this trend line, you ought to go long, but there's a problem, right? For me, I'm not saying for everybody now, for me there's a problem. And what is the problem? The problem is this: I don't see a credible reason to draw an upwards trend line, because if I draw an upwards trend line, it was going to be something like this. I don't see a credible reason to. So what I do is, instead, I do this. I don't know what's going to happen with price. I just sit and wait. Maybe price breaks the whole thing, price or whatever it does. But when price breaks this, I'm simply waiting for price to do this. A pullback that is not lower than this. You get? A pullback that is not lower than this. It could be even as little as this. And then when I see this pullback, I then draw a new line from this point to this point. Now you can see I have this line. I'm going to make them bolder, right? I'm going to make them bolder. And then I have this line. So now you can see I have two lines in the same direction. However, one is following all the touches. The second one is following the most, after the break, the most recent pullback. When price breaks above this, that is when I'll enter the market. So I'm going to be entering the market in this manner at this point. So when price breaks above, then I will enter the market, placing my stop loss where, because I'm not able to draw a new upward trend line from here, I'll be able to place my stop loss just below this trend line, and I'll follow until I walk out of this trade. So basically that's the same exact scenario I am having right here. And as you can see, it price made the first trend line, made the first touch points here, and then price broke right here. However, I didn't follow that break. I waited for that initial pullback, which is this, and I drew the new line touching its origin. And when price broke through this new line right here, I finally dived into a trade and followed the trade suit until it ended up in whether profit or loss, I don't mind. So it ended up in this case, it ended up in profit of $1.71. How come? Well, when price finally moved, you can see my safety line, the new safety line I drew here, following price until price broke it at this point, and then I exited this trade with the little profit I had and walked away. So moving on to the next trade, we have the euro against the US dollar. This was November 11th all the way to November 12th. Wow, this is short. 23 hours and 30 minutes. I lost $4.65. I didn't write my account balance. Okay, I didn't register these trades at the right time. I registered all those leftover trades about, I think, 2 days later or so. I think that was yesterday or so. But nevertheless, I had 3 touch points and 3 touch points. So let's take a good look at this trade on the chart. Let's see what it looks like. So I had 3 touch points right here. So this is 1 touch point on the action, 2 touch points, 3 touch points before price broke the touch point and on the broke the action line. And when price broke it, I took a buy. But guess what? Price immediately kept moving. Again, I went with the same pattern, right? I already had this line working for me, which I waited for price to make a pullback. This I saw as a good enough pullback. This is why I drew a safety line. Hence, I entered the trade. So if price breaks any line around here in this particular trade anymore, I'll be safer to just go into it like that because I'm fine. But I made a loss on this particular trade and it's okay. Moving on, we have US dollar against the Canadian dollar. This was also on 11th of November at 3:24 p.m. all the way to November 13th, 6:55 p.m. This trade, I didn't write the risk amount, but I had a loss of $3.45. It was 51 hours and 31 minutes long. Now, this is a scenario where the rule is kind of painful. Normally, I would enter this trade on this break. You can see this break right here. I would have entered the trade on the break of this upward trend line. And hey, I would have been in massive profit, right? Take a good look at this, all the way from this close to the ending of my exit. You can see that would have been, everything here would have been profit for me. However, I had to stay put and wait for the rule. So I had this little move here, which I would call a good pullback, right? A fair enough pullback. And then I had to now draw my second line, which I would follow before I followed into the trade right here. So shorting this market, waiting for the profit to hit. And let's see, did it even hit profit at all? Let's see. Okay, so this trade went to hit stop loss at the end of everything. So as you can see, the trade ended up consolidating all this way around here. The market ended up consolidating and price finally went strongly against my safety line. If you can even see, I didn't even use the first safety line because this is the first safety line. I should have exited the trade right here. But when I exited the trade, I don't think I made crazy loss because I would have exited here. This would have been my loss line. So I just added a little bit of pips to it, and based on the amount I'm risking, each pip is very, very cheap. So I'd say it's fine. I didn't lose much. I didn't lose much more than I ought to have lost in this trade after 51 hours of waiting. The last trade I have here is the New Zealand dollar US dollar. I think this trade closed some days ago, so it's not even up to a day. It's a 10-hour trade. I lost $3.53 on this trade. So right here it had two touch points each. Now I'm still taking 2 touch points trades. Over here what you observe is there's another trade already running in this market also. So this trade I decided to go with the old rule, right? Was it the old rule? Yeah, it was the old rule. I entered the trade here. No, this was the profitable trade I had left. So I entered the trade, immediately price went above. After I went out with profit, I entered a new trade following the opposing side of price. Since price had opposed my original trading idea, let's see how that ended. So I did the exact same playbook, right? Price had this downward trend, broke through it right here. We waited for what we'll consider a pullback, but I didn't wait. I wasn't patient enough because this is the actual clear pullback, but I didn't wait long enough. Hence, I entered here. So what does this mean? It means I need to learn how to draw a clear pullback. I need to learn to define what a pullback is before I draw a safety line with it. And I think I did that in one of my videos. I'll check. If I never did, I think a pullback is let's go back here just to show you guys. I think a healthy pullback is if price pulls, let's say 25% back into a move. So if, for example, price was moving like this, this is right here, like this, like this, like this, like this, and then price starts to do this. So these are not healthy pullbacks. Like these are not healthy pullbacks. But when price does enough to move backwards, so what am I even saying? What am I saying? If you take a look at this to this was a healthy pullback, right? But when you do the same for this low to this high, right? This point right here, this one right here is not a healthy pullback. You get? So it means whatever up price makes, you follow it. This also is not a healthy pullback. This, let's see if it was a healthy pullback. Let's see if it was a healthy pullback. This is also not a healthy pullback. But when price came back all the way to this point, now that's a healthy pullback. You get? This is also a healthy pullback. Hence, I can now draw a line. If I had drawn a line like this, then it means I can now draw a new line like this. So that's just what I'm just trying to say. I need to learn what to consider as a healthy pullback. I'm gonna research more on what is considered a healthy pullback and why should I call it a healthy pullback before I implement such thing into my strategy. That's my next research point for my next probably my next video. You'd see me talk about that. So that is the last trade I had. Before I have 3 ongoing trades. So let's take a good look at those ongoing trades on the chart. I like to look at ongoing trades right on the chart and not vocally. So we have the US dollar against the Swiss franc, and let's see what is happening here. So on the 4 hours, simply say we have a good situation. I need an arrowhead. Yeah. Okay. So I have price do what? The action line is this green line right here, the ascending line right here. You can see price broke this. I don't like this arrow. I think I want another arrow. That would make sense. So this is one touch point. This is one. This is another touch point right here. And then price did what? Price also gave me a third touch point right here before it finally broke the market here. So I went into a trade, right? I'm selling, shorting the market. I didn't short early. You can see I waited for the pullback, even waited for price to move ahead. If I had entered the market at the right time, I would have been in the market from here. I would have been in the market right from here. Actually here, because this was a close. So let's just call it here. And this would have been good profits as of now. However, enter the market whenever I entered the market and price started to move. But currently price is at break even. People will say it's not break even, it's close to, but to me this is break even. It's at break even. But yet I'm still following price. And I'm supposed to have a new safety line, I think. I'm supposed to have a new safety line. If I do this, yep, I'm supposed to have a new safety line, which will keep my price level at break even. So what this means is when the market opens, if the market hasn't moved too bad against me, I'm supposed to move my stop loss to break even. So basically, I think I should just do that already if it's possible. Yeah, it is possible to do that. Okay. So that is it. That's where my break even is supposed to be on this trade. The next trade I have running is the euro against the US dollar. Me and this euro against US dollar, we'll kill ourselves. So what's my premises of entering this trade? Well, the same thing over and over and over again. Over and over and over again, right? This was my downwards trend. Waited for price to break above. Didn't take a trade because I didn't see a pullback. But when I saw this move, I would call this a credible pullback. And then I was able to place a safety line upwards. That's ascending safety line. And then create a new downwards trend line following all of that. Why is this trend line hanging in the air? I think it's here. Okay, yeah, this is it. So with price breaking above this line, you can see it wicked it and then broke above. When price finally broke above, I waited for a while, waited for about 2 candles, then I came into the trade. Now you can see where my stop loss actually is right here. My stop loss is following this high safety line right here. So if price or the market starts tomorrow breaking this line, I will not be complaining because I would have lost a little bit of money. My last trade is British pound US dollar, the direct counterpart. And you notice what's happening here is there's a light show going on. But the light show is not for just light show. What's going on here is this. Price broke above this line. I didn't enter this trade yet. I waited for price to make a pullback. Now, this is more like a clear pullback to me. I see this as a more like a clear pullback to me. And then price did what? Price started to rally upwards again. Let me make this thicker. So this looks like a pullback to me. Price started to rally upwards again. And when price started rallying upwards, I waited for price to do what? Break the trends, especially this very clear 4-hour trend I have on top. When price broke that 4-hour trend, I decided to go into the market for a buy. And I'm hoping, right? It's a hope thing. Sorry to say that word, but it's a hope thing. Hoping that price is going to move higher for more market structure like this while respecting this line I have right here. If it doesn't respect the line and it breaks below my line, I do the usual, walk out of the trade. So these are all the trades I've taken recently and the lessons I've learned recently using the trend line technique, and I hope to become even better and better, and I wish the same for you. If you do enjoy this kind of video, do want to hit the subscribe button, like and share to people who you think will find it valuable to follow through in other people's experience and journey. I've learned a lot. Supply and demand, I've learned fair value gaps in balance trading, I've learned indicator trading, Bollinger Bands and the rest. I have done so many things in trading, but trend line seems to be the particular one that is by far the easiest and simplest to do. And yes, there are lots of bruises, but when the winning starts to come, especially if you know how to follow trend. When the winning starts to come, you most likely end up green beyond the losses you've made. This is not financial advice for you to go take all your savings and run into trading. Nope. So I'm not a financial advisor. I'm just here giving you the expose on my own personal journey. Thank you for watching. I'll see you guys in the next video. Peace.